determining the tax liability of determining the donations that will be allowable for tax purposes. So let's look at this question together. We are solving number 1, May 2022 diet. Number 1, May 2022 diets. I have the question, I will have this question displayed on my screen. At the same time, I will plead with you to read the question for me so as to be sure. Okay, let me just read it here so that you won't have excuse for muting yourself and then causing distraction. That in COA Nigeria Limited has been in business. The first thing is I will first need to come and check here. What do they want me to do? I'll check the requirements because the requirement will prompt me to know what is actually allowable and disallowable. The first thing they want me to do is to determine the company income tax liability for the relevant tax year. The second thing they want me to do is to comment about the treatment of donations and also comment about the treatment of dividends that are exempted from tax, right? So let's look at the question altogether now. We were told that Dadinkowa Nigeria Limited has been in business since 2009 as a manufacturer of many cubes. So that suggests to us that Dadinkowa is an ongoing business. So it also suggests to us that it's not going to have an abnormal basis period. So it's going to be having a normal basis period, right? Because it has been in business since 2009. So as a manufacturer of sugar cubes, the company sources sugar cane from northern part of the country. However, due to activities of some miscreants which prevented some of the local farmers to go about farming activities, the company has been facing a lot of issues in getting the needed raw materials for its operations since 2016. The company has issues with tax authority on the treatment of some items such as disallowing donation and dividend received at will. In the financial statement submitted and annual returns filed, the high overhead costs, particularly energy costs, make the operating environment not encouraging. In order to address this unpleasant business situation, the board of directors of the company at its special meeting held recently decided to close business operations temporarily or in the long run relocate to a neighboring country if the situation does not improve in the coming financial year. So they are only telling us about the advice. So they are not, this does not really mean that the company is under cessation rule or the company is a cessation company. They are only telling us of some of the intentions of the company. Does it make sense? Does it make sense? So as a company's tax consultant, you are informed of the decision of the board by the general manager when you visited the company to obtain documents that you intend to use to conduct tax audit and file statutory tax returns in respect of the just concluded year. Don't worry, in the course of the class, you'll be introduced to the idea of tax audit and investigation. So but that really does not have anything to do with this question, as they did not ask us to explain what is the idea of tax audit and investigation, right? So the general manager was pleased with your informal submissions and decided to inform the managing director. A meeting has been scheduled between the managing director and your firm next week. The profit or loss accounts in respect of the operations of the company for the year ended 31st December 2021 is as follows. All figures are assumed correct. So we have the following additional information. We are given the current asset, non-current assets. And for the fact that I have turnover in this question, are you with me? The turnover will make me explain one thing here. We have three types of companies. Three types of companies. We have number one, types of companies. I will be sharing this Excel file with you. And the types of companies is actually into three parts. We have the small companies, Sorry, let me say type, turnover, and tax rate. So the type here, we have small companies, right? And what are small companies? Small companies are companies with less than 25 million turnover. And such companies are paying tax at 0%. In other words, they will not be paying company income tax, right? So the second type of company that we have is medium-sized company. And medium-sized companies are companies whose turnover are over 25 million, but less than 30 million. Are we still on the same page? So that is 20%. When I ask questions and it requires answer, you can use the chat room to make sure I know you are following. Large businesses or large companies. That's over 25 million, sorry, over 100 million this time. And obviously less than infinity. So that's 30%. So those are the classes of company. So given this metric that is on your screen, this company having 382,500,000 is what? A large company. Are we on the same page? So this company is a large company. Number one. Number two, this turnover that I have here also suggests that the examiner wants me to compute minimum tax. The examiner wants me to compute minimum tax. That's the two reasons why he gave turnover. So anytime you have turnover, he expects me to compute what? Minimum tax. So I have all expenses, right? And then I have extract from the company financial position. I have the following additional information was made available. Legal and professional fees included. Then dividends and maintenance included. Uh, Allowance for doubtful debts and all of that. So now the first thing I want to do now is to check following my yes, that's what I said. Above 200 million, but less than, sorry, let's say less than 30 million, less than 100 million, I mean to say, oh, sorry. So there is less than 100 million. All right. So we have 20%, right? Thank you. So we have the question now is to compute. Let me say computation. So we have Dadinkowa, Nigeria Limited, right? And what I want to do is to compute computation of company income tax. So I will check the accounting year that I have. The accounting year that I have is what? 2021, and companies are assessed to tax on preceding year basis So I have 2022 year of assessment. 2022 year of assessment. Are we on the same page, please? So the next thing I want to do now is to compute my, so I have this. All right. So here, I will start from my profit or loss for the year. But in this case, I have loss for the year. So I will start with loss for the year, right? $6,530, right? Then I want to add, please, can you all hear me? Please confirm if you can still hear me, please. Add disallowed expenses. Please confirm if you can hear me in the chat room, please. So add disallowed expenses. Okay, good. So I want to add disallowed expenses. So I want to check one after the other the expenses that are here and determine which is allowable and which is disallowable. So we have one, rent, salaries and wages is allowable except where there is additional information that tells us that either it is paid for acquisition of assets or it is used for private use. That's where we disallow salaries and wages. But where the examiner is silent, salaries and wages is allowable. Rent and rate is also allowable except we have additional information that suggests otherwise. Electricity and lighting also is allowable except we have additional information that states otherwise. Transportation and traveling is an allowable expenses. Stamp duties for increased share capital is disallowed. Stamp duties for increased share capital is disallowed. Increase in share capital. It is disallowed because it has to do with share capital, and share capital has to do with issue of shares, right? And anything that has to do with issue of shares is capital in nature. So it's not supposed to be here. So I have 1,500, right? Auditor's remuneration is allowable. We have prepared legal and professional fees. If there are no additional information around it, it should be allowed, except otherwise stated in the additional information. So we also have repairs and maintenance should be allowed, except we have an additional information. Allowance for doubtful debt, obviously we are going to be having an additional information around it to know if it is general or specific. And like we said in our last class, general provision is disallowed, specific provisions are allowed, right? The next one we now have is what? Interest, what have you? Depreciation. Depreciation is disallowed. So let me put it here. Depreciation is disallowed. So I have how much? 35,600. I have interest on loan. Interest on loan naturally should be allowed, except if it is within related parties. And when it is related within related party, we treat it as if it is an arm's length transaction. When you are doing transfer pricing, you will understand that better, right? Then we have general and administrative expenses. Ideally should be allowed, but the examiner will tell us anything he wants us to do. We have donations and subscriptions, 15,000. So donations to approved bodies naturally will be allowed. Donations to fund created by the government will be 10%, should not be more than 10% of the adjusted profit before deducting donations. I hope you still remember that. Loss on disposal of foreign equity shares is disallowed. Loss on disposal of foreign equity shares. is disallowed. So we have 1,750. So let's go to the additional information. The additional information will further suggest what we should do, right? We were told that miscellaneous income was made up of, are we still together, please? Please use the chat room to tell me we are together. So excess of evaluation of investments is 770. And investment is capital intensive, and anything capital intensive should go under non-taxable income. Non-taxable income. Dividend received, dividend received too is non-taxable income, right? Dividend received is non-taxable income because it has actually, because we have the net amount, so it has actually suffered withholding tax, and withholding tax on dividend shall be the final tax payment, right? Then we have other income. Other income is taxable income. Other income is taxable income, except the examiner states otherwise, right? Then we have legal and professional fees include debt collection expenses. Debt collection expenses is reasonable enough for the business. So for that reason, it will be allowed, right? It will be allowed. The next thing we have here is tax consultant professional fee. Tax consultant professional fee is allowed, is an allowable expenses. Renewal of short lease is allowable. Renewal of short lease is allowable. But renewal of long-term lease is disallowed, because once it becomes long-term lease, it then becomes, it will be treated more like a PPE, right? So for that reason, it will be disallowed, right? Retainers fee is like your consultancy fee, and for that reason should be allowed. So everything under legal and professional fees are allowed. Does it make sense? Now let's go to the next one, where we said always expect the examiner to give you additional notes to each of the items on the profit or loss, because that will further guide you to whether it is allowed or not. So we have improvement to industrial building. The word improvement suggests to me that it's going to increase the lifespan of the asset, and so it should be disallowed. And that is right. We have repairs of industrial plants. Repairs of industrial plants is allowed. Are we together, please? Renewal of tools and implements should be allowed, right? Should be allowed. Then we have construction of companies building gates. Construction of companies building gates should be disallowed because it has to do with construction, and construction of a long-term asset should be disallowed. How much is that? Ah, are we still on the same page? Are we still on the same page? So we have allowance for doubtful debts. Allowance for doubtful debts, general provision will be disallowed. So I'll bring it here. So the next one we have is construction and general provision for bad debts, and that's 17,400. Abi? Then the next thing we then have is what? Specific provisions. And specific provision should be allowed. Specific provision should be allowed. Bad debt written off should be allowed. And bad debt recovered should be taxable income, actually. Taxable income, because it's an income. Interest on the loan was paid on a facility obtained from licensed Nigerian Deposit Money Bank. So that even suggests to us that it's not actually a related party transaction. So we were told that general and administrative expenses there will be additional information to further guide on provisions for bad debt. But once there's no additional information, you could assume that it is a specific provision and for that reason, it is allowable, right? So we have general administrative expenses were made up of vehicle running expenses. Vehicle running expenses is allowable, insurance premium is allowable. Fine for driving offenses does not concern the tax authority, and for that reason, it is disallowed because it's out of carelessness, right? So we have 470, right? Then we have other administrative expenses is actually um other administrative expenses is allowed, sorry. So we have donations and subscriptions. Included donations was 12 million paid to a fund created by the federal government. So it means 3 million was donation and subscription, beg your pardon. So subscription is allowable, but these donations, we said it is after you determine your adjusted profit before donations, before you determine that if this is 10% or not, Abby. So we have donations. We'll first add it here. Donations 12 million. Please stay with me, please. Then we have taxable value of qualifying capital expenditure. So because I have this information, this suggests to me that the examiner wants me to compute my capital allowances. So it suggests to me that the examiner wants me to compute my capital allowances. Also, additions capital allowances, unrelieved capital allowance brought forward, unabsorbed losses for the year. The term shows me I have to compute my loss. So let me go to my work note now. Please, are we still getting it? If you can get what I'm doing, just type here that you can understand. So I want to compute my capital allowance now. So I'll say working one, computation of capital allowances. So I will come and check for my classes of asset. I have industrial building. I have manufacturing plant, right? I have motor vehicle. I have furnitures and fittings, right? And of course, I have my total. Yeah. So the initial allowance rates or investment allowance rates, but beginning from September 3rd, September 1st, investment allowance is no longer admissible for tax purposes. But because it was signed to law May 28th and the syllabus says every law will be examinable after 6 months. So 6 months is still November 28th. So we still expect the examiner to guide you with the provisions of investment allowance. Are we on the same page, please? Then we have initial allowance. Initial allowance here is 15%. You'll be given the initial allowance in your exam script. Just go to the last sheet of the question paper. You will have it there. So I have 50% also for motor vehicle, 20 and 25% for furnitures and fittings, and obviously nothing for total. I have annual allowance. And for annual allowance, okay, thank God. So in case you have any question, just tell me in the chat room. I will attend to it as soon as it pops up. So annual allowance 10%, right? Plant is 25%. Here is also 25%. Furniture and fittings 20%. Yeah, we have it here. Then I have my Naira sign off because 1,000. All right, we have it this way, right? So I have my what? Now, the issue here is that we have some assets that were purchased in 2016, right? So you have to be careful at this junction. You have to be very careful at this junction. The first one I have is industrial building. That was purchased in 2016, and what I'm given is the amount as tax written down value. Notice that the examiner used the word tax written down value here. So the examiner is telling me that what he has as the amount is the tax written down value of the asset, right? So I will check from 2016 to 20. So 2016 starts counting in 2017. 2016 starts counting in 2017, right? So I will count 2017, 2018, 2019, 2020, 2021. So I'm in 2022 year of assessment, right? So let me say I have TWDV here. You have to be careful of that information that you have there. You have to be careful of that. So I have 84,000. I have 28,000. So I have 14,000. I have 2,700, right? Now I have additions. What are the additions that we have? We have motor vehicle debt is 4.5 million, right? And we have furniture and fitting 1,200, right? Are we still getting it, please? So I have initial allowance. Do I have any other addition apart from those two? Not at all. Okay. Do I have another addition? Not at all. But I have something in the body of the question that told me about an improvement to building that I disallowed. So it's going to be, yeah, right? I have improvement to building 700 that I'm going to bring in. Does this still make sense to you, please? So I have initial allowance. Initial allowance is 15% of the cost and charged once in the lifetime of the asset, right? So I'll just do 15% of the cost as the initial allowance. So I have then annual allowance. So annual allowance now, let me put it as annual allowance of the old assets, just for separation purpose. So, and we said annual allowance of the old asset will be cost divided by the remaining useful life of the asset. Cost divided by the remaining useful life of the asset, right? Are we still on the same page? Are we still together? Please use the chat room to show we are still together. So now I've identified that the remaining useful life of these assets is
Yes,
5
sir.
years, please. You said I should scroll down. Is this what you want me to do? All right. So the annual allowance of the old asset, first I want to determine what is the useful life of the asset, right? I want to determine the useful life of the asset, right? So on determining the useful life of the asset, what am I going to do now? The asset was purchased in 2016, became admissible for capital allowance purposes in 2017 year of assessment. So I have 2017 year of assessment, 2018 year of assessment, 2019 year of assessment, 2020 year of assessment, 2021 year of assessment. So it means this asset has used 5 years already. So for the remaining useful life is 5 years. So I have the tax down value divided by 5, right? Who is presenting this one? Sorry, just a minute. All right. So that's 84,000 remaining divided by the remaining useful life. That's 16,800, right? So here, the asset was purchased in 2018 year of assessment, right? So when it was purchased in 2018 year of assessment, so I will check 2019 year, 2018 year of acquisition, 2019 year of assessment, 2019, 2020, 2021. So this is the fourth year of the asset. 2022 is the fourth year of the asset, right? So I have this. This is supposed to be the total I will be admissible for as annual allowance. But don't forget, there is need for me to remove 20, to hold on to 20 naira as the tax down value of the asset, right? So I have 27,999.980. Do you understand, please? Yeah, it was purchased in 2019 year of assessment. And because it was purchased in 2019 year of assessment, 2019 year of acquisition, that's 2020 year of assessment, 2021 year of assessment, 2022 year of assessment. So this is the third year of the asset, and the asset is supposed to use 5 years, right? So I have 3 years gone. Sorry, I have 2 years gone, 3 years remaining. I have 2020, 2021. So 2 years gone, 3 years remaining. So I will do this divided by 3, right? And for, sorry, 2 years remaining. Sorry, I thought it's function features. 2 years remaining, that's 7,000. And here I have 2019, 3 years remaining now. So I have this divided by 3. Does it make sense to you, please? Are you understanding? Are you understanding, please? Then I have annual allowance of the new asset. Annual allowance of the new asset is cost minus initial allowance, right? times the annual allowance rate. Okay. Is cost minus initial allowance times the annual allowance rate, right? So then I will now determine my TWDV, tax return value, and that will be this plus this minus the initial allowance minus the annual allowance minus the other annual allowance. Sorry, this plus this. But here, I will have addition of this. So this is really what I need. The total allowance is what I need. Are we together, please? Okay. For the old assets, what I did was we were given the year of acquisition, right? And assets acquired in 2016 will start being admissible for capital allowance purposes in 2017, right? So you will count from the year of acquisition to the accounting, from the year of assessment of the acquisition to the year of assessment that you are computing for, and then do your tax return value divided by the remaining useful life of the asset. Does it make sense now? So for building, it has spent 5 years already. So we are doing for only 5 years. For this guy, he has spent 3 years already. This is the fourth year. But the law provides that there should be 2 naira that will be available for tax purposes, right? Also for this, I have the 687. I have 2 years remaining. So I will just do 14 divided by 2. And here I have 3 years remaining, so I'll just do 22,700 divided by 3. Is it clear now? So let me come back to this, this, and see if there's any other working I need to do. There's no other workings I need to do for now. There was addition of 1, 2. I calculated initial allowance. Oh, sorry. So I've calculated it now. Thank you for the observation. So I will now come and say the total disallowable expenses is how much? So I have less non-taxable income. So what are the less non-taxable income that we have? We said dividend received should be there. Dividend received is how much? We have uh Do you have any dividend received? Okay, under miscellaneous income, dividend received 3,460. And also we have excess on revaluation of investment, and that is 770. So I have this, right? So my adjusted profit before donations, I deliberately want to use the before donations just for explanation purpose. Actually, you are not supposed to put anything as the, yeah, this plus this minus this, right? Now, donations must not be more than donations to the fund. Where is this fund? Donations was 12 million, and the donations must not be more than 12 million, Abi. So donations, right? Are we on the same page, please? Please, are we on the same page? So donations should not be more than 10%. So we have 10 divided by 110, because donation is inclusive in determining the adjusted profit, times 59,560. So what do we have? So I have 5414.55, Abi. So I will now say my real adjusted profit now, slash sustainable profit, is what? This minus this. Are we on the same page, please? Are we on the same page, please? Now, if we have that, so I will now say less loss relief. How much is the loss relief that we have? We have unabsorbed loss relief is 8290, 4380, 9800, 13600. So let me just bring the total here. Eight two ninety plus 4380 plus 9800 plus 13600. Right? So we have this. So we have this plus this. Are we still together, please? Any questions so far? Do we have any question? All right.
Sorry, question.
Yeah, please go ahead.
All right, sir. Thank you. Please, I want to, actually, I'm on transit, so I'm just looking at the video and listening at the same time. I don't know where this loss relief is coming from.
Okay. We have unabsorbed losses from previous years.
Okay. Okay.
So that's what I just picked. Unabsorbed losses for previous year. All right. So less capital allowance. So I have capital allowance brought forward, right? How much is capital allowance brought forward, please? Do I have any? Unabsorbed capital allowance brought forward is 15,200, right? So I have 15,200. Okay. The adjusted profit before donations is my loss for the year, add disallowable expenses less non-taxable income, right? Now, so we have capital allowance brought forward for the year. Capital allowance for the year as computed is how much? That is, how much did I get? I got this. So when I add these two together, I have this, right? So I will have capital allowance utilized. Now, at this point, you have to be careful also because the examiner will give you something that we have to use. You know, we said capital allowance is restricted to two-thirds of accessible profit apart from manufacturing or agro allied. Abi? So let's come here and check what's the nature of this business. Is a manufacturer. So because he's a manufacturer of sugar cubes, all his capital allowances is supposed to be utilized. So, but because his capital allowance is 71 and it's more than the profit, so it's going to relieve only to the extent of the profit. It's going to relieve only to the extent of his profit. So we have 18,075, right? So we have unutilized capital allowance is what? So we still have this minus the capital allowance utilized, right? So then I now have my total profit. Total profit is 18,075 minus this will give me what? 0. So then I will have CIT using this will be 0, Abi. Then tertiary education tax. But because I have turnover here, I have something that would help me compute my minimum tax. So I will say minimum tax computation. My minimum tax is 0.5% of turnover less grant investment income, right? So the next thing I would not want to determine on what am I computing the 5% on, right? So I have turnover here. My turnover is 382,500. Because donations is also included in determining the adjusted profit. Because donations is included in determining the adjusted profit. So it's donation inclusive. All right. I hope that answers your question. But now you will notice that in this question, for instance, the man differentiated between turnover and non-taxable income and miscellaneous income. But now you notice that this excess on revaluation of investment is a non-taxable income. Dividend received is actually a frank investment income, but was not included in turnover initially, right? But other income of 6,830, we were not given what it should be or what it is. So that suggests to me that it should be part of the turnover. So I have other income of how much? That's 6,830. And so I have total income. So total here will now be this plus this, right? So minimum tax therefore is 0.5% times this. Right? So now I will now come and say I want to determine my total tax liability, right? Total tax liability. Minimum tax is how much? This. Then I have tertiary education tax at 2.5% of accessible profit. And that's 0.025, or let me just do it so nice. 9% times this. So total tax liability is what? Any question, please? Any question, please?
Hello, sir.
Yes, please.
Hello, sir.
Yes.
I think this question company.
What is it?
I think the company is a manufacturing company.
Is it what? Mining company?
Manufacturing company.
Yes, yes. It is.
Does it expose to minimum tax computation?
Yes, yes. We have three companies exempted from minimum tax. Companies under commencement rule, companies
Okay.
under commencement rule, agro-allied companies, and companies whose turnovers are less than 25 million. Those are the three companies exempted from minimum tax.
Okay. In line with the new
Finance Act, yes.
Okay. Okay, sir.
Yeah. Any other question, please? Any other question, please?
So in calculating the education tax, we have assessment adjusted profit before donations, and we also have adjusted plus accessible profit. Which one are you going to take the percentage on it?
Is the adjusted profit accessible profit that you are using? Because it's 2.5% of accessible profit. Does that answer your question?
Yes, sir. Okay, sir.
Any other question, please? So with that, you've gotten your 20 marks. If it were to be an exam question, if you were to be in the exam, very simple. Any other question, please? So,
Hello, sir.
yes, please.
Hello, sir.
Yeah, I can hear you. Please go ahead. Yeah, please go ahead.
And under that, I mean that donation, sir.
Yes, please.
That 10 over
Yes.
110.
Yes, I explained that, donations in this case is allowable.
Multiplied by 59,500.
Donations is allowable. Hello, can you hear me? I can. Your network is a little bad. So you can mute your mic and ask
You
questions
adding
now.
that donation back? Or
I didn't get you. I'm struggling to hear you.
yes, sir.
Hello. So in the absence of further questions, I will share this Excel file with you after this class. I think.
Question.
What? Yeah, please go ahead.
Please, how did you compute that minimum tax?
It is 0.5% of your turnover and your other income.
Okay,
Yeah.
sir.
Yeah. Any other question, please?
Hello,
Hello,
sir.
sir.
Yes, please.
Okay, the donation, I want to know why we remove it, and as you know, we have two separate places that we treated donations.
Yes.
I know that donations just are disallowed according to the items that are disallowable. Some donations are
No,
allowable.
donations there are three issues around donations now. There are three issues that surround donation now. The first issue is that donations to approved bodies are allowable.
Yeah.
Donations to fund created by the government for natural disaster, ecological issues, war and crisis
It's
are
allowable.
allowable.
Correct.
Are allowable, but should not exceed 10% of the adjusted profit.
Okay, okay, and I understand.
Okay. The third issue around
Thank you, sir.
donation is donation must not be capital in nature, except donations to tertiary education approved by the government.
Okay.
Okay.
Okay, thank you, sir.
You're welcome.
Hello, sir.
Yes, please go ahead.
Yeah, regard to the issue of determination of revenue
Determination
and the
of what?
minimum tax, determination of revenue,
That was used
minimum
for
tax
minimum tax
computation.
purposes. Yes, go ahead.
Yeah. Sir, is it the sales or plus other incomes, either taxable or non-taxable income?
No, the thing is that the tax law says turnover minus or deduct franked investment income.
Okay.
The reason why the law was so explicit in that sense is because the law assumes that in determining the turnover, there's likelihood that you would have added your other income to the turnover and you'd have added the franked investment income to the turnover. But in this question, the turnover appears because we have turnover and miscellaneous income. So this person has classified revaluation of investment, which is actually a non-taxable income. I've included dividend received, which is actually a franked investment income, another income. So because it's not explicit about what the other income is, so we regarded the other income to be part of the turnover. That's why we added the other income back to the turnover. Does it make sense now?
I'm okay, sir.
Okay, that's fine. Any other
Thank you.
question?
Yes.
Please go ahead.
Please, sir, on this restriction of donations to 10% of total profit.
Not 10%. There are terms that we use in tax. Total profit, you get total profit after you've deducted your capital allowances. And that is not what I did. Do you understand? What I did is adjusted profit. So donations should not exceed 10% of adjusted profit. That's the idea.
So the question is, the donation should be restricted to the 10% of profit.
Exactly.
In a situation whereby we have more than one items of donation to approve funds, is it that the total donation, if it is 3 donations to
not the total
places,
donations.
Okay.
I think I get your question. We have donations to approved bodies. So far donations are made to approved bodies. It doesn't need to be restricted to 10%. It's the donations to the fund created by the government that should be restricted to 10%.
Okay.
Donations to approved body passes the test naturally, provided it is not capital in nature. Does it make sense to you now?
Yes, sir. Thank you, sir.
You're welcome. Any other question, please? Any other question? So in the absence of any other question, permit me to call it a night here. I wish you a good night rest. Please study before you sleep and do enjoy the rest of your night.
Thank you. God bless.
Amen. And you too.
Thank you, sir.
Thank
you, sir.
Yeah, you're welcome.
Good night, sir.